Hey guys, Akil Stokes here. Welcome back to another Trading Edge video, your weekly dose of me here on YouTube, even though I seem to see you every day throughout the week. But today we're going to talk about some fun facts of getting funded, or maybe I should say fun facts of staying funded. And these are going to be important lessons that traders should know if they want to become consistently profitable traders and stay consistently profitable traders, whether you plan on getting funded by a prop firm or whether you plan on just trading your own money. And I guess we should start at the beginning, right? What is a prop firm? What does it mean to get funded? A prop firm is essentially a place of private money that allows you to trade their money on their behalf. So let's say me and a few of my friends got together, we all threw some money in the pot and we said, hey, we're gonna start a prop firm. We would then look to bring traders in that would trade on our behalf. So you would come in, you would trade our money, you'd get a percentage, we'd get a percentage. It's a win-win. And this is a crucial part, not a crucial part, but it could be a crucial part in the development of a trader. Now, if you're new to the channel, welcome, by the way, make sure you subscribe. But one of the things that's different on this channel in comparison to many of the other places you'll see on the internet is that we like to talk honesty, right? We're not selling you dreams. We're not talking about trading being a get-rich-quick scheme. We're not saying it's super easy and everyone can do it if you study or watch a video a week or something like that. We're here to give you the harsh reality, and I don't mean it in a negative sense. I sometimes get criticized for, making it seem like I'm scaring people off and saying that you can't be successful. It's quite the opposite. I'm trying to encourage and motivate. I went through a hard path in my trading journey to eventually make it, and I just want to share with you the truth of what you have to look forward to. And if you're someone that is really determined to become a consistently profitable trader, it's better to know your obstacles than to not know your obstacles. If you're someone that's looking at this as a hobby, maybe the only reason you want to do it is because of the get-rich-quick nature, well, now you know the truth and you can quit before you waste your time or your money. But the truth about trading is that most traders don't go on to become millionaires, right? Most traders don't come into the market with a $5,000, a $10,000 account and become millionaires in a year, right? Most traders use trading as a form of supplemental income. So we have a lot of traders that we work with who are using trading as a way to bring in some side money so they can fund their own entrepreneurial ventures. We have some that are using it to bring in some side money so they can start kind of reducing the hours at their work. We have a lady we just spoke to who retired, and now she's got her own business, and I'm thinking like PT, physical therapy, but she doesn't plan on doing that forever. So she wants to have trading in her arsenal so that she can bridge the gap for when she retires from one and go into the other and have time freedom and all that fun stuff. And there are different ways that you can use the skill of trading to supplement your income, right? One, you can just be an outright trader, right? You can trade your own money. You can do it consistently over a long period of time, slowly compound your account and get exponential growth in that way. Two, you can look at it from a business perspective. So for me, for example, when I first got good at trading, not when I first started, I was pretty bad for a long time, I went into money management. So I went into managing accounts for others as a way to make an income off of my trading because I didn't have enough of my own account to trade full time. I eventually went into coaching, and that ended up being a business as well. So you can manage money, you can be a coach, you can be a signal service provider, right? Where you just give signals and have people pay you a fee for it. You can be a developer. We work with a brilliant developer who just builds systems and indicators for people based on what they want in their trading strategy. You can also get funded, and this is the route that I would have taken if I knew about it at the time. So again, getting funded is you're using this skill, you're putting it on display, you're passing a certain challenge, and then what you're doing is you're trading money for someone else, you're keeping a percentage for yourself, and then you're growing your account. And in most places, the better you get, the more capital you have access to, which means the higher your percentage is and all that fun stuff. So a little bit of a background on what a prop firm is and what it means to get funded. Now, this is the point that I wanted to talk about because I got a comment from a guy the other day, right? He reached out on Twitter. He said, hey, Keel, I saw these cool stats. I was wondering if you can touch on them. And we did within the Tier 1 trading platform, but I forgot to do it here publicly on YouTube. So that's what I wanted to do today. And it's going to share maybe some scary stats, about the percentage of people that get funded and stay funded, but also some very good lessons that you need to be aware of. And from working with a lot of funded traders over the past few years, I can tell you that many of these lessons are 100% spot on. So let's start off just by looking at some harsh numbers, and these stats are going to be from October and November, about how many people actually passed the different phases of kind of their funding challenges. And you can see that live accounts in October, right, 3,544. Only 18% of that number made it past phase one. Again, this is a big reality check of how tough it is to be a consistently profitable trader. And we always talk about, hey, 10% of traders are, make it, 90% fail. These numbers aren't too often. You'll see that in the next month as well. Now, you also have to keep in mind there's a fair amount of people that go into trading thinking it's a get rich quick scheme, thinking it's easier than it actually is. So there's a lot of people that don't actually belong here that fail out pretty quickly. But pretty interesting to see that 18% make it past phase one. Now, out of that 18% that make it past phase one, 31% of those made it past phase two. So another big chop right there. And then 4% of people that made phase two, so 4% of that 31% of that 18% actually reached their first profit split. So a very low number right there. And just look at the same thing from November, a little bit more live accounts, almost 6,000 here. You can see about 10% only made it past phase one, 24% who made it past phase one made it past phase two, and then 3% made it to their first profit split. Now, I must say this, and I'll shoot a link to this article down below. I don't know who this funding site is. I don't have any affiliation. So, you take these numbers with a grain of salt. Just in my personal experience in trading and being in this industry since 2007, these numbers seem to be like the norm. That's why I feel comfortable bringing it to you. But, it is what it is, right? You never know something unless you've personally experienced. I don't work with them. I'm not a part of their board or a partner or anything like that. So who knows? These numbers can be completely fake, but I don't see why they'd give you that. Now, the important part I want to talk about, and these are going to be the things that are going to help you as a trader, are going to be the key takeaways. And I don't agree with all of them, but there are a few that I think are very important. And the first one is this. They say that over 60% of the traders in their database do not use a stop loss and have a high risk of ruin. Do I need to comment on that? Common sense, right? We all know the danger of using a stop loss. I know there is a small minority out there that are against stop losses and they're only there so our broker can spy on us. If you're of that belief, I recommend you watch the Trader Coffee Break video that Jason Grayson and myself did this past Wednesday called Market Manipulation. We kind of dispel some of those myths about the market being manipulated and some of those fears or excuses that traders have to stop themselves from being profitable. But I can tell you this, right? Stop losses are not a bad thing. They are protection. It is jumping out of a plane with a parachute and that little extra parachute just in case the big one doesn't open. Do you always plan on the big one opening? Yes, but if it doesn't, it's good to have that safety. And again, I've been trading since 2007. Every once in a while, you get some of these black swan events. I'm not saying that your stop loss will be triggered perfectly, but it's better to have something there for protection versus nothing. It's also good to know your risk as well. So use a stop loss. No surprise that people are getting skunked out and destroyed because they don't have a stop loss in. That should be common sense. Another one that stood out to me was number 2, said traders who have made it to their fourth pay cycle all have risk management strategies of below 3% risk on any given day. And this goes into that myth about trading being the get rich quick scheme and some of the stuff you see on the internet. I'm sure all of you have seen the little screenshots of people saying this and saying that. I think in last week's video or maybe 2 weeks ago, I shared with you a screenshot of the person that made 300% in a day, right? And you got to use common sense, right? If you made 300% in a day, either one of two things happen, right? Either you traded with a very small risk, you traded a lot, and you just hit everything, right? Jackpot day, which does happen time to time. Maybe not 300%, but you do have those massive days, so it is possible. However, what probably happens is that you are over leveraging yourself. So you're trading a position size that is way too big. And when things go good, when you're way too big, you make a lot of money and it seems great, right? However, when things go bad and you're trading way too big, you blow it even faster. So it's no surprise that a lot of traders were probably trading way too big in order to pass the challenge and get the requirements of whatever they need to return. And they got lucky and caught a hot streak. But we know that after every extension comes a drawdown, whether it's in the charts, whether it's in your equity curve, and they weren't able to survive that drawdown because they were trading with too much size. So I was always taught that you should trade so small that wins don't make you happy, losses don't make you sad from a monetary perspective. I've done the math, right? You should trade so small. I know in my account, I have to lose basically 200 times in a row to go broke. If you ask any professional trader out there, they'd probably even tell you 3% is a little bit high, but definitely under 3% risk is where you should be. So another no-brainer in my opinion. Number 3, the profitable traders are in the market less than 4 hours a day. So another myth out there is that in order to be a successful trader, you've got to trade 24 hours. You got to be in the market 10 hours a day, right? Day traders need to sit in front of their computer 6, 7, 8 hours a day to be successful. And that's not the truth at all, right? I don't spend a lot of time in my trading at all. And well, at least at this stage, when I was learning how to trade, that's a different story because you're putting in study hours, right? So when we talk about 4 hours in the markets, I'm assuming they're talking about 4 active hours of like trading, right? Studying and stuff like that. That's a different story. But you don't need to spend nearly as much time in the market as you think. If you were a swing trader, so someone trading on a, maybe intraday perspective, hourly and up, you can probably get all your analysis done in the markets in about half an hour a day, and you know exactly what you're waiting for and what needs to happen. And after that, all you need to do is come in and check to see if it happened and, make your adjustments accordingly. Even if you're a day trader, when I used to day trade, I only would spend 2 to 3 hours a day in the market. My day trading hours would be from 7:30, 8:30 to 9:30, right? 3 hours, and that was it, right? During that London, New York crossover session, and the rest of the day was pointless. And what happens if you're spending too much time in the market is you get bored, you feel like you should be trading, and then the quality of your trading opportunity starts to go down. So, we all do dumb stuff when we're bored, right? Dieting is a good example, right? If you're around your refrigerator or your cabinet or whatever, what are you going to do? You're going to eat, you're going to nibble on treats, right? And you're saying to yourself, man, I can't seem to go 15 minutes without eating. However, if you're away, if you're distracted, if you're doing something else, you can go 6 hours without eating and you don't even notice it because mentally you're away from it. So we see the same thing with trading, right? Step away from your charts. You're going to come back sharper. If you're on your charts all the time, the quality of your decision making is going to go down, and you never want to do that when real money is at stake. Now, the next one, most profitable traders do not hold trades overnight. I don't necessarily agree with this, but this is going to be depending on what type of trader you are. I understand that most traders taking this prop firm route are probably more intraday day trading just because how a lot of the challenges are with the requirements. And if you're a day trader, intraday trader, I certainly think you shouldn't be holding trades overnight. But if you're a higher time frame trader, right, 4-hour trader, more of a swing trader, daily, stuff like that, you've got to hold trades overnight, right? You've got to give your opportunity room and time to play out. So I think that one's really dependent on what type of trader you are. I don't necessarily agree with it, but maybe prop firm specific, it's probably a thing because it's more of a day trading approach that most traders are taking when they're doing these challenges. So the next one that stood out to me is this one. I'm skipping around a little bit, but if volatility is prolonged, it's a bloodbath of epic proportions. It means that people are getting killed. And this makes perfect sense, right? We talk about the mental side of trading, right? What happens when we see volatile markets, especially if you're not using a stop loss, right? You're going to get destroyed. But people feel like they're missing out, fear of missing out. When the markets are moving and they don't have a setup and they're watching and paying attention to the internet and everyone else is bragging about how much money they made or how many pips they made, in hindsight, of course, they feel left out. They feel like this thing is moving. I should be getting a piece of this. And then once again, the quality of their trade starts to go down because they're no longer trading their plan. They're kind of just gambling and trying to hop onto a ride. And trust me, smart money, insiders, whatever you want to call it, they know this and they will bait you into making dumb decisions. And what typically happens when you're late to a move is you're the one that is getting eaten alive when it reverses. So not a surprise to see that at all. Unfortunately, we see this on a daily basis with newer traders just across the internet and whatnot in the form of emails and I did this and how come this and blah, 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 blah. So it doesn't shock me at all here. Now, this is the last one I want to touch on. It's going to be all traders who received record payouts have lost their accounts within 3 weeks of the record payout due to excessive risk. And again, this goes back to what we talked about earlier with the 3%, right? There's that boom and that bust of trading, right? If you're risking too much, if you're over leveraged, if your size is too big, when things are going good, you're going to make a massive amount of money. But the thing is, you don't have the ability to control that, meaning that you're going to just keep that same risk on because we never know when a hot streak and a losing streak is coming. So when you have that drawdown, you're going to lose a lot. So it's not a surprise to see that correlation of getting these massive returns and then giving it all back. In fact, what happens during that massive return as well is usually your confidence gets a little bigger, your ego starts to expand, and maybe you increase your size even more, or you start taking trades more aggressively because you're the man, you're the woman, you're the best trader out there, right? You can't be stopped. You've got this mastered. And again, you just fall into the trap. And what's interesting is that, we see a lot of traders fail, and a lot of traders fail because of self-sabotage. It's not like they lack the skill of trading, right? Because that's something that you can develop if you work hard enough. But it's that mental side, right? They're treating trading the wrong way. It is a get-rich-quick scheme instead of a slow, boring wealth creator, right? And it needs to be looked at as the latter, right? Trading is a wealth accelerator, right? And the main goal of trading is don't go broke, right? My mentors always taught me this. Rule number 1, Akil, don't go broke. Rule number 2, Akil, don't go broke. So I would much rather have a slow and steady incline where I can implement some money management strategies and kind of compound that even quicker, but be able to kind of keep the ship steady during the drawdown, then be someone that has an equity curve of super high moments and super low moments. Because especially if you're trying to do something like a trading firm, or if you're trying to do something where you're managing money for others, right? Trust me when I say that managing your drawdown is the number one thing that matters. Clients do not care how much you make. It's how much do you lose in order to make that. So hopefully this gave you guys some tips. If you have any questions or anything that you would like to add, if you're someone that's funded and you'd like to share your own experience, do me a favor, leave it in the comment section below. I'll read through them. We'll maybe make this into a podcast or something as well. Now we're going to dig into my top 3 trading ideas for the week. But before we do me a favor, hit that subscribe button, hit that like button if you like kind of the rant I just went on. We just capped 50,000 subscribers about a week or so ago, or that's when I noticed it, at least here on the YouTube channel. So a big thank you for that. Next goal, 100,000? I don't know, but it starts with you hitting that subscribe button and making sure you don't miss this video or the videos that I do throughout the week. All right, let's hop into the trades. So this week, I actually have a lot on my radar. It's very hard to narrow down what 3 trading opportunities I want to share with you. And there are a lot of good ones that didn't make the cut, including Dollar Canada in front of you, which would be a follow through from one of the pairs we looked at in my trade of the day here on YouTube. But I've got 3, and I'm happy with the 3 because they are good opportunities, but they are also diverse opportunities, meaning they show different approaches to the market. And something I got this week was a message on Instagram basically saying, hey, Akil, what strategies work? And I went on a whole rant, I believe Tuesday, about how there are endless amounts of strategies that work. And I think it's important for new traders to hear that, right? I just put out a podcast this week called The Best Trading Books for New Traders. You should check it out if you haven't done so already. But it talks about one of those books being Market Wizards. And Market Wizards isn't a book that's going to teach you how to trade. It doesn't, show you any technical analysis or really give you any strategies. But the most important factor for me in Market Wizards was it was an opportunity to see that different traders can trade different ways and still have success. Where before reading that book, I was convinced that there was a single secret way of trading. And if I didn't find that single secret way, I was never going to make it. So hopefully the diversity that I show you here kind of encourages you no matter what trader you want to be. And it kind of gives you an idea of, hey, maybe I like this style over another. But we're going to start off on man, I don't even know. I didn't put them in order this week, man. So we're just going to go randomly. We'll call this number 3, the Aussie yen. We're going to start here on the daily chart with the Aussie yen. Now, you can see Aussie yen coming off of a big bearish day to end the week, right? We have a very good candlestick combination here, right? We've been talking pin bars all week. This is a beautiful one right here. Bang. Right? Other names for that as well. I just call them all pin bars. I don't get too caught up in names anymore. But we got that beautiful bearish rejection candle right here. And then we have a nice high momentum bearish candle to end the week, and one that crushes through structure. So if we're going off a daily candlestick prediction, right? My prediction here is that we are likely to continue lower. And the question I need to ask myself is, if we're going to continue lower, where are we likely to continue lower to? And the level that stands out to me, right, is this level right here. I am a student of structure. So what I do is I identify key levels of structure. They are basically the areas in which I predict price action to go. I always start off big, and then I narrow down and specify the level that I think we're going to hit using numerous amounts of tools. You'll see me throw in maybe some volume. You'll see me throw in Fibonacci, stuff like that. But also just my eyes and my discretion and the skill that I've honed over the years of identifying levels of structure. And I can tell you that this level right here is what stands out to me. Now, again, we can do a few other things here, right? We can bring on kind of a volume indicator and just see what level has a lot of volume here in the market. Most recently on this last swing, you see the most volume is going to be up here at our consolidation, but really the next highest level is going to be right in this consolidative zone. We can take a Fibonacci retracement as well, swing low to swing high. And we can see that we have one of our main Fibonacci's, our 618, lining up there as well. We're actually banging right into a 50%, right? So we can slowly build that confluence. Now, as I go down to a lower time frame, I'm going to go ahead and erase some of this stuff. You're going to get a zoomed in view at the closes. And one of the reasons I loved this close is because this was a very, it was at a bad location, right? This combination right here. But in general, this was a nice little stall, right? Price action broke and closed below. We had a little low tail right here showing us some bullish rejection. Then we got a doji candle, which is indecision, so a little bit of a stall. We had another doji candle and an inside bar, which is indecision, a little bit of a stall, a little bit of consolidation. We had another neutral candle after that, followed by a bearish candle, but a bearish candle that did not break and close below. So we've got this area where the market is just stalling out. And we know that because of the location, right? Lower low, lower close, we can predict that it's most likely to continue to the downside. But unless you're an aggressive breakout trader, we need that confirmation. So getting this lower low, lower close to end the week was the confirmation that we needed to make me very comfortable in us continuing lower. So now again, going back to the projection of this point, let's bring back our volume. Sorry, got a little sneeze, halfway sneeze going on, so I might have to mute it. There we go, but thanks to the beauty of editing, you guys won't hear it. So you can see you have a nice little heavy volume cluster right in here. We can go back and bring our Fibonacci retracement on. Swing low to swing high. You can see a 618 Fibonacci right in that level. That's going to be an important Fibonacci level. The golden mean is what they call it. And then we can take an extension from our previous move down, our swing high to swing low right here and back up. And you see we're going to get a 1618 right there. So we can narrow this down, this zone down even lower to the area between this 1618 and the 618. Some of you guys have already saw it, but there's an even handle number as well in there, 81 flat. I think 81 flat is a nice level to predict a continuation to. We do have a little minor level of structure right here. I did take that into account, but I do think this is the better and more important level right here. So nice bearish continuation trade here on, what is this, Aussie yen. Me personally, I'll be looking for pullback. I'm a pullback trader, so I would look for the pullback and the extension down as we head into next week. Let's go into pair number 2. Pair number 2 is going to be the New Zealand yen, and this is very similar to another pair that didn't make the cut. If I can remember which one it was it Aussie New Zealand? Yeah, look at that. Aussie New Zealand. We go down to the hourly. We're going to see basically a deceleration pattern, right? This is called a rising channel. Essentially, this is like a loss of momentum pattern. So, right, price action comes from a steep incline, right, and a steep bullish move, and then we kind of are still creeping up, but obviously with not a lot of strength, and we typically see some relief. Now, the reason I didn't share this one is because we already saw the relief. This is still a good opportunity. Again, just didn't make the cut. Here on New Zealand yen, we've got something similar, not as pretty, right? The channel isn't the same, but we're coming down into a pretty decent level of structure. So looking here on the daily, right, we can see that we are coming down into a previous double bottom, right? An area that price has tested before. If we look left, you'll see that we have tested it again. So we're coming right down into that previous level of structure support. We have a high momentum candle here on the daily that smashed down into that level. So it's going to be very interesting to see how the open looks in the first day of trading next week looks. But you can see at the very end of the session, we have a little bit of a loss of momentum. Now, again, take this with a grain of salt because we do have to recognize that this is, at least this final candle is the end of the week, right? We're getting kind of into the last day of the trading week, so we are going to see momentum slow a little bit. But the fact of the matter is we're coming off a very steep slope. The slope is slowing down. It's slowing down right into a previous level of structure. This is a perfect area to look for a little bit of relief in the form of a counter trend move. And if we're going to get that, I would expect a move back into our previous structure up here. So nice structure-based counter trend trading opportunity here on New Zealand dollar. Again, we want to wait and see. We always want to be predictive in our analysis. So predict that this is a potential zone of reversal, yet reactive in our execution. So we need to wait for the right candlesticks in order to execute the trade. But again, what we're doing here is we're not telling you, hey, trade this right away. We're saying keep an eye on this. If it gives you the signals that you need, then there could be a good trading opportunity at hand. Now, before we get into our number one trading opportunity for the week, I want to do a little shameless promotion. I mentioned this earlier, but every Tuesday, Wednesday, and Thursday here on the YouTube channel, I've been doing a live stream, so a little bit of a sneak peek inside our live trading room, which is something that we do for about 2 hours a day, every day on the platform. Join me for the live stream. I go over my top trading idea of the day. I usually put in a little bit of a rant. We talk about fundamental analysis, kind of what's on the news, what to watch for. You guys have been doing a great job of asking some very good questions. It's been very helpful to me, helpful to you, helpful to the tier 1 members inside the platform. So I'm really enjoying the experience. If you have the time, 7:30 a.m. Tuesday, Wednesday, and Thursday. Join me here on YouTube for the live stream of my top trading idea for the day. Now to my final trading idea of the day. Trade number 1, we're going to be on the Canada Swiss. So all three are going to be exotics this week, but we have a nice little opportunity here, right? So Canada Swiss here on the daily has just come off a double top, right? One top, two top. Now it's not a double top that I was necessarily interested in because of the location. So the fact that we were able to, I'm going to sound like a broken record, break and close below a previous level of structure gives a lot more credibility to this pattern and essentially validates the double top and allows me to predict that we are likely to continue lower. And again, the question I want to ask myself, right? See how it's all systematic, right? If we're likely to continue lower, then where are we likely to continue lower to? And this is the level of structure that stands out for me, right? Once again, we can bring in some volume. We can see where are the heavy levels at of our final swing low to swing high, right down here, plug it in. You can see, boom, right at the lows of this level are going to be the heaviest levels of volume. Again, not saying you need to look there, not saying you need to trade there, but just looking for more and more clues. We are detectives, we are private eyes, we are lawyers in the market, meaning that the more proof we have, right, the more, evidence that we have, the better the case we can make for our trading opportunity. We don't want to force it, right? That's another thing. We can easily force stuff, but we want to take what's there and use it to our advantage. So let's go down to a lower time frame here, the 4-hour chart. Some of you guys are going to recognize that this double top pattern has really transformed into something else. Can you guys see it? Just look at the movement. Can you see an M-shaped thing anywhere? Yep, if you said a potential advanced pattern formation or more specifically a bat pattern, then you are 100% correct, right? I'm going to take my Fibonacci retracement from this last swing right here. Swing low to my swing high and plug it in. And you're going to see that if we continue our move down, we're going to have a potential bullish bat pattern looking like this. X to A to B down into my 50%, B to C, not violating my A leg right here, and then a CD completion right down here at 71.92 right at the bottom of this zone. So let's go ahead and reduce this a little bit. Now, this is a bullish bat pattern, meaning that if you are a bat pattern trader, what you're looking for is you're looking to buy it down in the completion zone and look for a little counter trend move up. But something else we can do is trade this as a trend continuation trader in anticipation of the bat. So we're anticipating that price is going to come down to this level. You can see that we have the fresh break of our B leg of structure in here. Something to look for throughout the week is a continuation down, whether it's a pullback and a continuation or whether it's a straight continuation, doesn't really matter. Fact of the matter is we have a nice target level going downward. 72 even, I think, is a very good level to look for. We can look to trade this either way, either down as a continuation trader to the bearish side, either waiting for that level to complete the bat pattern and trade it up as a bull, or we can do both. We can trade it down, we can stop and reverse, we can trade it back up. The opportunities are endless.